Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for Tuesday, February the 4th. Before I jump into the content for this video, please do me a huge favor. Hit that thumbs up button. Don't forget to subscribe to the channel, and don't forget to click that bell icon to get notifications when I release new updates. So it's been an interesting 24 hours for the market, and I'm going to dive into Bitcoin. Also going to dive into altcoins a little bit more today and talk about some of the stuff I see going on there. And yeah, let's do it. The first chart we're going to look at is going to be the daily chart of Bitcoin. So I went ahead and pulled that up here. And a couple things I want to point out on this daily chart. So obviously right now we had put in this double top on RSI back here. Had the big pullback. This is where it pulled back from like 9,200 down to around 8,200, found support and bounced. Put in a new double top here, came up, had a bearish retest, which was a great place to go short if you wanted to. And then of course we have pulled back about $400 to $500 since then. Right now, the level on this RSI that really intrigues me is going to be down around this 52.8 area. Now, on the smaller, like when we zoom in and look at this, why is that important? Well, it's actually trying to form a giant double top, okay? It's not a double top until it actually breaks through this line and closes underneath that line. It's important that we let it close. But it's not just that it's a level here that's important. If we go back historically, watch this. If I take this horizontal ray off of there and I make this a horizontal line so we can go see how far it goes back. This low point is 52.8, so I'm going to change this to 52.8. Now, watch this. It was resistance right here. It was resistance right here. It played a role as resistance back through here, resistance here, had a little baby support right there, resistance through here, right? So on and so forth. We can go back and see that that line is really a key level. And it's not really a coincidence. 50 is kind of the level a lot of people watch. That 50 RSI, when it's above 50, they feel like it's more bullish in nature. When it's below 50, they feel like it's more bearish in nature. So the 52.8 happens to be around that same zone. Again, a break and close below that level is going to be very bearish in nature. If we take a look at the chart itself, I have just two things on here. I've got this blue line, which is the 200-day moving average. It's a simple moving average. And then I have these red lines, which actually form a wedge. Now, I had thought this was a parallel channel. I still think there's a very valid argument that you can make that this is a parallel channel. It would look something like this. Let me draw it up real quick. So the green lines would be the parallel channel. If that's the channel we're in, it would look something like that. And we would be coming back down. First, I think to test the middle of it. If we do make it that far, down around 8,800 bucks or so, and if that collapses, then we could look at testing the bottom of that channel down around 7,800 to 8,000 area. So I think that channel is still a possibility, but right now, I'm really paying more attention to this wedge. And let me make these lines a little bit thicker so it's a little easier to see. And here's what I'm seeing on this, okay? This wedge, as it gets closer to the bottom of this wedge, if it breaks south, I talked about this in yesterday's video, it's going to have a target of about $1,000 or so. If we measure from the top of the wedge down to the mouth here, bottom of the mouth, about $1,000. So if it breaks through down around this area, look at the conversion. Suddenly we're like, okay, well, wait a minute, look at this. It puts a target down around the bottom of this channel. So I do think both are probably valid, and I think the wedge is just going to play out first if it plays out. And I think it's going to start to send the price down. Now, here's what's interesting about this. You can see I've got this little note on the chart because I posted this on Twitter. The 200-day moving average right now is sitting right at the bottom of the wedge, but it's curving down, and even if price moves up, it's going to take it a while to curve back up. So this is going to keep moving down for at least a few days, which means that if we test it, say 3 or 4 days from now, or 5 days from now, or a week or 2 weeks from now, it's going to mean that we broke out of the bottom of this wedge. So again, if we break out of the bottom of the wedge, that's typically a sign we're going to go down, and hit that price target, which will be down around 7,800 to 8,000 bucks. Okay, so that's kind of what I'm seeing with the wedge and the parallel channel. Now, what really becomes interesting about that is that means that we're back underneath the 200-day moving average, which is a key level of support right now. If we lose it as support, then of course that becomes resistance. So that's where we have to start wondering about something that, does it look like this and bounce up, or does it come down here, come down to this 7,800, 8,000, 8,200 area, come back up and find out, uh-oh, now this is resistance, we're going to go down and put in a new low, right? That's the bearish scenario. And by the way, I think it's completely valid. You know, I'm not as bearish as I was. I like the way this rally had nice legs to it. It wasn't just one straight up like boom, you know, short stop pump. It was up, down, up, right? I like that. But I'm also going to be aware of the fact that there is a bearish scenario sitting out there that you know, a lot of people are simply disregarding as impossible, and it's certainly not impossible. It's not even unlikely. I would say with the information that we have at our fingertips right now, it's probably about a 50-50 chance of whether this was the start of the bull market and we're going to get a retracement and then another leg up, or whether this was just one big fake out on low volume to wash out bears and to trap longs. Right now, open interest on BitMEX, last I looked, was over $1 billion again, right? I haven't looked in the last several hours, so let me take a look. Yeah, it's sitting at $1,021 million, which is extremely high. Somebody earlier commented on Twitter that's actually an all-time high for open interest. Today we're up to like $1,040 million, okay? So a big move is coming. We just don't know for sure which way it's gonna, you know, go. But this is the daily chart, and this does look way more bearish than it looks bullish. Okay. Now, what I'm going to do is I'm going to zoom out to a weekly chart, but I want to make sure that we're on the same page. Remember, today's Tuesday. That means we're 2 days into a 7-day candle. A lot can happen in 5 days, and really, I'm not even sure I should even talk about this, but I'll just kind of quickly throw it out there so you know to watch for it. So if we look at a weekly chart, we did indeed close outside of the bear market box, okay? But I said I thought we would come right back down inside of it. So far, it looks like that might happen. We don't know for sure. I'm going to take the 200-day moving average off. I'm just going to leave the 50 weekly moving average. It's actually sitting down around 8,100 bucks. So again, that's a key level that we do want to keep an eye on, right? If we fall underneath it, that flips to resistance, okay? But more importantly, right now, what's starting to form, and again, 5 days left in the week, guys. Don't read too much into this. We don't have any idea what this will look like when it closes. But right here, these are actually the beginnings of tweezer tops. Tweezer tops are a reversal signal, okay? So if this weekly doesn't come in and put in a new high, then it's very possible that we end up putting in a tweezer top weekly candle, which is a reversal signal. It signals that we're going to, you know, change trend. So, or at least change direction, okay? Again, does not mean that we go in and put in a new low automatically. It's entirely possible that we're just simply going to go back down here and retest, you know, maybe support down here around, even down on this level, around 7,500 or so, okay? So lots of stuff, lots of possibilities, right? We have this level here at 78.59, which was a key level. We broke underneath it. It was resistance, broke above it. It would be completely normal and textbook that becomes our support, and we simply bounce off of it. And then we'd have not a higher high on the weekly. We didn't put that in, but we'd at least have a higher low and a potential higher high coming in the future, okay? So that's what I'm watching on the weekly chart. If we take a look at the 3-day chart, this thing's a bit of a mess, but essentially it's doing kind of what, you know, I was wondering about. Again, not super confident in this RSI right now. More watching it, but you know, we had our red box, we broke out of it, that's all good. We had our blue line of resistance support, we're able to take lots of trades off of it, all good. Now the box that I'm really paying attention to, well, there's two things I'm paying attention to. This red line, right, which was this upward sloping line, was here's the first touch, here's your support, here's your resistance. Looks like resistance here, but more importantly, I'm paying attention to this parallel channel. You know, it starts here, seems to be support, and then resistance, and it looks like it's playing resistance again, which makes me think we're going to go back to at least the middle of that channel and possibly the bottom. Now, why is that important? Well, let me put all the lines in the box back on there. See where that middle of that channel is. As it's curling up here, it's very possible that when it comes back down, it might actually come down and basically act as support, which would be right around the top of this box again, okay? Could see something like that. Again, if it falls back inside the bear market box, I think that's bad news for Bitcoin. I think we're going lower. So essentially, that's what I'm saying on Bitcoin. The other thing I'll point out is this channel. This was the downward sloping trend line that I said that we should be watching. Talked about it in yesterday's video. Been talking about it on Twitter since the 2nd, and it is still holding. Not only do we have this nice downward sloping trend line on top, that's red because I like to draw resistance as red, but we have this downward sloping support as well. So it has created this parallel channel, and essentially what we want to watch for, if we want to watch for a break and a close outside of the channel, if it closes above it, that's very bullish in nature. If it closes below it, that's very bearish in nature. And at this point, with RSI sitting down around 40, 41, I think a close below it will take us down into the oversold territory. I think we'll go ahead and dump and punch in, maybe something like this back here or something like this back here. All right. This definitely looks like distribution on a 4-hour chart. It looks like we did indeed have, some accumulation going on and then a move up, and it looks like distribution. There was somebody that posted on Twitter. I wish I had the chart because I didn't take the time to draw one up, but essentially they posted a wick off schematic over the top of this, and it was darn near perfect for distribution. So we'll see, right? We'll see if that's what this was or not. It would be a little bit strange to see an accumulation period this large followed by a distribution this small. So there is a little bit of a gotcha there, but this does look very toppy to me, and I do think that it's probably one of two things. Either it's topped out and we're going to correct or even make a new low, or two, this pullback that we got down around $9,000, 9,100. If we go up from here, I think that was the correction. I think that was the pullback, right? And what I mean by that is I mean that it could go much, much higher before it finally decides to correct back down to its 61.8 fib. So instead of saying something like this, where we get this correction from down here, back to this area, if it decides to just keep going up, let's just say, for example, it goes up to 11 grand. I'm pulling the number out of my butt. I'm just giving you an example, okay? Let's say that it does that. Then suddenly we might go way up here and then pull back down to this level. Now, here's what I told people back in May and June when people were starting to get, really bad FOMO. Like they were worried about buying at like $8,000, $9,000. And I was saying, look, even if this thing goes up to its 61.8 fib, which back then was like around 13.4, when we draw our Fibonacci levels, this price was down around $9,000 at the time. But I said, hey, even if it goes up to like 13.4, you're more often than not going to get a retracement to 61.8, and you'll probably be able to buy around $7,000 in the future, right? So why would you want to buy at 9 or 10 when you might be able to buy at 7 later? And at the time, a lot of people were very skeptical, and I had a lot of really silly comments on the YouTube channel and so on and so forth. But guys, where did it pull back to? Look at that, right? It's just what Bitcoin does. It's not a guarantee, okay? I don't want to make it sound like a guarantee, but not only did it pull back to that area, but look at that. It just consolidated. And I talked about that in those videos last year saying, look, usually it's not just a tail that goes down there. A lot of times you will get consolidation in those areas. That's exactly what happened. This consolidated right inside the golden pocket. So, just stuff like that. So if this does go up to just, again, say 11 grand, hell, say 12 grand, right? Say it goes way up to 12 grand. Your 61.8 is still going to be down here around $8,600. For this to go up and the 61.8 to be higher than what you can buy Bitcoin right now, you'd be looking at about 13.4. So if it goes up to 13.4 and then corrects to its 61.8, it would correct back down to around 91.50. Okay, so that's the reason I don't FOMO in, is because I know that eventually most assets will retrace back down to that level, and then I can just buy at that level with a fair amount of certainty. Nothing is certain, but more often than not, it works out pretty well. Okay, so yeah, that's kind of what I'm saying on Bitcoin. What I want to talk about these altcoins today is I really want to talk about the Bitcoin dominance, because I am seeing people saying that, hey, this has broke this key level of support, and I haven't seen my talking about alt season, but I've seen a lot of people talking about my money's in alts right now. I'm all in on alts, or I'm 80% alts, or I'm 90% alts, and all that kind of stuff. And I get that excitement because alts have pumped up, a lot of them 100%, 150%, 200%, and there's a lot of sleepers right now that have not pumped yet. So for example, XRP, people have been talking about it, saying, hey, this hasn't pumped yet, right? So if we look at XRP real quick, I don't know what it looks like today. So here's XRP. Turn the volume off just because it's messy looking. If we put a 200-day moving average on there, so it finally broke above its 200-day moving average. So a lot of people are probably wanting to buy this. I was actually watching this 2 days ago, but it closed underneath it, and then I took my eye off of it. A lot of people are probably wanting to buy this right now, and maybe it does pump. Maybe it does do what other alts did and pump up, right? There's a lot of alts that are looking like this. But here's the thing, and this isn't specifically geared toward XRP, because XRP actually does its own thing a lot of times. It just kind of, does its own, dances to its own drummer. But on Bitcoin dominance, yes, I do think that was a level of support that was broken, but it really wasn't like that big of a level of support, right? It was really just support through here. So when I start looking at this from a bigger picture, we've got this upward sloping trend line that goes all the way back, really, to January of 2018. See this? It just slopes up. And then if you look at top, this almost looks like an ascending triangle that just had a little false break right here. It came back underneath it, acted as resistance, and down it goes. What would this mean for alts? Well, if this is indeed an ascending triangle, we might see alts pump just a little more versus Bitcoin come back down to this, which, Bitcoin's dominance would be dropping. We might see dominance get down to this level and then bounce off of it. And ascending triangles are actually bullish in nature, which means that it may actually break out. Now, what does that mean big picture? Well, guys, this is why this is so important. If you look at the previous market cycles with Bitcoin, the altcoins, a lot of them died. They didn't go down 90%, 95%, and then come back. Most of the alts went down 95%, 98%, 99%, and then died. They never came back. And a lot of the old timers have been talking about this on social media, like the alts didn't die this time, which is a scary thing, because if this is indeed an ascending triangle and this breaks north of it, right? If we just look at the target here, look at that, a 94% move, 34 points of dominance. Obviously, we can't have 104% dominance, right? 100% is the most you can have. But it looks really bad for alts if this is the case. Basically, what's happening, if this is the case, is alts just got exit scammed, right? A lot of alts got pumped so that whales could unload their bags on unsuspecting newbies and unsuspecting retail traders. And then if this suddenly breaks north, we might see a lot of these alts finally capitulate and just basically go to zero, right? Or as close to zero as you can get. So this right here is something that I would certainly keep an eye on. If I want to get super bullish on alts, I want to see this dominance fall out of the bottom of this triangle. If dominance finds support on this level, I'm going to be super cautious, and I'm probably going to go ahead and move out of the majority of the alt positions that I'm holding right now. Because again, if this starts going up and if it breaks through this, we may see the alts just kind of, really, really, if people think they saw depression already, they may be really surprised about how low some of these alts could go. And this is kind of the scenario where I would see something like Litecoin, for example, going down to $7. If you guys remember a long time ago now, right, 6-8 months ago, I was saying that this chart actually supported a move on Litecoin down to the $7 area. And that was one reason that I was very, very nervous about buying it, even at $35 and $36. I had bids at $34 that got missed by $1 or $2. That's just the way it works sometimes, right? But those would have been trades. I wouldn't have bought them and held them. I would have bought them and sold them on this rally. If we look at Litecoin on a weekly chart, and I'm just using Litecoin as one example, if we really go back in time here, I'm going to put this on a log chart so it's easier to see. We do have, gaps on this thing way back here at $4.50, okay? And we had this head and shoulders pattern that I had pointed out way back in August, right? And people thought I was nuts. Left shoulder, head, right shoulder. If we put volume on there, volume confirmed it. We had high volume on the left shoulder. We had less buying volume in the middle. And then we had, of course, the sell volume on the right-hand side. So if we take a look at that head and shoulders and we actually measure it from the top down to, you know, depends on what you want to call the neckline. If we could go way down here, but let's use this one instead. If we're going from tail to wick, and then we pull that down. Oh, goodness. Right? Do you see that? Where it lines up at a $70 drop from $76 puts the target of that head and shoulders right down around that old gap. Okay, this is the scenario that's been in the back of my mind this whole time. Like, oh my gosh, you know, what if this is the scenario? And you might ask, well, what would cause that, right? How would that happen? It's really simple. Basically, what we would need to see for something like that to happen on alts, we need to see something like what we saw in the past, right? So if you look back at 2013, the low in 2013 was back here, you know, around, well, excuse me, not the low in 2013, but after this little mini bubble, right? It popped, it came down here, and then it moved up to its all-time high, just shy of 1,200 bucks. Had the false bottom at the 38.2 level, pumped back up, and then dumped, right, to a new low. Well, what did that new low do? It actually came down right around that 61.8 golden pocket, and it tested the previous all-time high. In fact, it went underneath the all-time high, okay? If we have a similar scenario as that play out again, where we go from the bottom, draw our Fibonacci levels, you know, suspiciously enough, I've talked about this in past videos, but if you're newer to the channel, you may not have seen it. This bottom in 2018 was right around the 38.2 fib, just like this bottom in April of 2014, okay? When we pumped back up, if you look, we pumped back up right, you know, I'd say 75% of the way up toward the zero. I mean, look right here, this pumped up only about 25% of the way. So there's a little difference there and the strength of the pump. But if this thing follows this past history here and it dumps back down to a new low, that new low could retest the old high, which is the old all-time high is right there at $1,177. So that's the scenario. And again, I'm not saying this is going to happen. I'm just saying if you want to know how it could happen, this is how it could happen. If Bitcoin falls through and goes all the way back down and retest this old high, that's the scenario where we would see Bitcoin dominance skyrocket and most of these alts would probably go to zero. Okay? So just something to keep in mind. All right? I'm not saying it's going to happen. I'm saying here's a chart, here's some lines. Watch what happens when we get to those lines. If we break through this and start going down, perfect, right? To me, that's going to mean that we probably won't put any new lows on Bitcoin. And it's going to mean that, you know, I probably want to start looking for some alt positions because Bitcoin is losing ground. It's that simple. But if it breaks north, quite the opposite. So the last thing I'm going to do in this video is I want to go over a thread that I did last night. There was a guy that did some hard work. He posted 25 reasons to be bullish on Bitcoin. I felt like he did a pretty good job with the thread. I felt like his reasons you know, warranted some discussion. So what I did was I did a counter thread. He and I talked. Very nice guy. I mean, we didn't like become buddies and talk on the phone, but we had a, you know, just send each other a couple messages, and seems like a nice enough guy. I have no problem with his thread, but I wanted to do a counter thread, right? And say, okay, let's take these 25 reasons one by one and let's talk about them. So his first reason for being bullish: Bitcoin is above its monthly 10 EMA and found support on its monthly 21 EMA. Okay, well, the same thing happened in 2014 before price dumped 75%. So is that a reason to be bullish? I don't think so. Okay, there's been past occurrences where it was a fake out. Number 3, this was a study he did about price being at the top of the Bollinger Band. So he actually posted a Bollinger Band chart showing that price was riding along the top edge. You know, just like I put on Twitter, I don't know anything about Bollinger Bands. I mean, I understand what they are. I know how to add them to a chart, but that's about it, right? So I don't want to sit here and you know, pick apart that argument because I don't know enough to do so. What I will say is, you know, price is always at the top of those bands when it's in an uptrend. Like June 2019, it was at the top. December 2017, it was at the top, and that didn't mean anything. It didn't mean we're going to keep going up. Number 4, he mentioned that Bitcoin is back above his 21-week EMA. Again, same thing happened in 2014 before price collapsed. Okay, so I don't care about that. Number 5, Bitcoin's RSI is back above 55, which is historically bull market territory. This is, that's what he's saying. That's why it's in quotes. Again, look at 2014, right? This was 2014. This is current price action. You can see here that we had actually come up and tested this line, this 55. It acted as resistance. We dropped down in 2014. Same thing we did right here in 2019. Okay, came back up for a retest, had a false break above it, got up to 58.61, and then collapsed. Price went down 75%. Well, we've had our breakthrough in 2020. We got all the way up to 57.35 RSI, and now if price collapses 75%, it's going to put us down around $3,500. So again, I don't view that as bullish yet. Number 6, weekly MACD bull cross. So again, if you look, we had a weekly MACD bull cross in 2014 before price collapsed. We also had one in the latter part of 2018 before price collapsed over 50%. Number 7, he said we closed above the mid-range weekly range. Okay, this was the range that he drew. I don't view this as a range. We were outside of it for months and months and months. I don't think it's a range at all. So, if it's not a range, then the argument holds no weight. Number 8, we put in a weekly higher low. Okay, well, if we're going to call this a higher low, then we've got to call this a higher low. And we obviously know what happened after this. We had the pump and then the huge dump. So if we're going to use those, let's go ahead and use them. There's the pump. What comes next? Huge dump. Not bullish in my opinion. Number 9, he said Litecoin has often been a good indicator of what Bitcoin will do, and Litecoin has already made a higher high on the weekly chart. I agree with him. He's right. Litecoin is often a great indicator for what Bitcoin is going to do. Unfortunately, the part that he missed, Litecoin bled 75% before putting in that higher high. If Bitcoin bleeds 75% from its top, it's going to drop down to $3,500 before reversing its trend. Number 10, Bitcoin is now above its 200-day moving average. Yes, it is. It's bullish in nature. 100% agree. However, it was also above its 200-day moving average back in October, and it meant absolutely jack crap. Number 11, the daily 50 and the 200 EMA have a golden cross. I talked about this in a video a few days ago. I don't believe that these golden crosses are worth a whole lot. I think you should use the moving averages, not the exponential moving averages. In 2014, you had a golden cross, price went up and then dumped 75%. In 2018, you had a golden cross right in the summertime of 2018. That was around $8,800 Bitcoin. Of course, we all know it fell down to $3,200. So they mean jack shit. Number 12, there's a weekly supper guppy. The weekly supper guppy is in a bull trend. I don't even know what that is. I've seen people talk about it. I have literally no idea about it. But looking at the chart, it looks like it actually flipped green way back here around May or June, and price actually fell below that level since then. So I'm not sure how that's bullish in nature. Okay. Number 13, the daily supper guppy is in a bull trend. Again, I know nothing about this particular indicator, but it didn't take long to find out that it's been wrong before. This is what happened in 2014. It turned green and then dumped 75%. Number 14, Bitcoin had a close above its 61.8% fib, which historically was the change of trend from bear to bull. Okay, well, this is 2014, closed above. This is 2018, sorry. Closed above at 61.8 and then collapsed from $10,000 down to $3,200. This is 2014, closed above not just at 618, actually went all the way back up, basically retested its top and then collapsed. Okay, so again, not seeing the bullishness. Number 16, a simple amplitude carryover of this channel would target 11.5K. I don't even know what that means. I don't know what he's talking about. Bull flag target would be 18K, and a 1.618 extension would be 18K. Great. Targets seem plausible. If we head up, those are the targets that I might keep an eye on, but we have to head up first. Number 17, the 7K range looks like wick-off accumulation, which is a solid base for an uptrend. I agree with him. It did look like accumulation. I think that's what it was. However, I believe it was a local move, and we're now in distribution. That's just my opinion. Number 18, the past 12 months look like stock absorption with uptrend continuation in the future. I can actually see this. I don't have a bearish counter argument. I think that's correct. I do think it looks very similar to that chart, with one small difference. Our volume didn't have this huge breakout volume. Okay, we'll see, right? I'm not going to sit here and say that's impossible. Maybe that is what's happening. Okay. Number 19, the halving is happening soon, which will decrease daily supply hitting the markets. HODL coins are increasing. Okay, well, it's hard to debate this, right? Because it's basically a theory based on an event that's only happened twice in human history. It's not enough statistical data to really say that it's going to do this or that. So rather than debate it, I'll just say, sure, maybe. Number 20, number of wallets with more than 1,000 Bitcoin is increasing steadily, proving accumulation of whales. Okay, I don't view that as bullish or bearish in nature. That's simply what happens in markets. Smart money takes dumb money to the woodshed. What does that mean? It means that in markets, there is always a transfer of wealth. It's from the dumb money, the retail traders, right? By the way, I'm a retail trader, right? And they typically take money away from us and they shift it to the institutions. The institutions are very good at faking out retail traders in order to take their money. That's what's happening in crypto. When you get futures involved and you get big institutions involved, of course, there's going to be more wallets with 1,000 Bitcoin. Number 21, hash ribbons are giving a buy signal. Okay, I don't use hash ribbons, but someone on the YouTube channel did recently show them to me. I went back and back tested them, and I have to say they have a pretty decent track record. They're not perfect, right? Nothing is, but they have been right more than they've been wrong. So I think that is a bullish argument that holds some serious weight, and it should be considered when deciding whether to be bullish or bearish. Number 22, MVRV, I don't know what that is, closing above the trend line. Similar setups from previous bull markets, similar setups from previous bull moves. Okay, I think what he's saying is that the trend lines, once they're broke, it starts the bull runs. Okay, this was the trend lines that he drew. Just one problem with this, those were drawn with extreme bias. I went in here in Paint and just drew a couple of quick ones just to show this. This was the actual trend line back in 2014, had a false break and then collapsed. And the same thing happened in 2018. This was actually the trend line, had a false break toward the end of the year and then collapsed. So we haven't had a false break yet this time. Right? If we do have a false break, if this ends up being a false break and collapses, then somebody in the future can come in here and draw a new trend line that connects all those points and it will look good. So I think that's just, an example of a bias when drawing trend lines. Number 23, the whole stock to flow model. Okay, I wish, guys, that I had a link to this. I should have saved it. I don't know why I didn't. There was somebody who was much more informed on this, much more intelligent in this specific area, who basically did an entire write-up on why the stock to flow model is bullshit and it's not a predictive model, okay? I can't find the link, so I'll just say do your due diligence and make sure that you're checking out all the resources when it comes to how reliable that model actually is, okay? And number 24, Bitcoin is still respecting the log growth curve channel from its inception. That's the chart that everybody keeps showing with the big curved line that shows it going to like 200 grand. The problem with that is I've shown this in past videos. You can adjust those lines just a tiny bit. Like adjusting that line by a few dollars back in 2011 will change its target today by hundreds or even thousands of dollars. So you can draw that 100 different ways to fit your particular bias. So again, I don't view that as a valid reason to be bullish on Bitcoin. So that's it for today's video, guys. I hope you enjoy it. Please remember, I am literally some guy sitting in a spare bedroom, so nothing in the video is financial advice. Nothing in the video is trade advice. You should always do your own due diligence before making any type of investment in cryptocurrency. If you enjoyed the video, please be sure and give it a thumbs up. Don't forget to subscribe to the channel. Don't forget to check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and of course where you can join my trading course if you'd like to learn technical analysis and how to trade for yourself. This is James with Crypto Common Sense reminding you to please trade safe.